journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm going to talk a little bit here about the A word, the Astro. I have a healthy respect for it. I don't understand it a lot. I've always surrounded my people around people that know a lot more about it than me, and I try to pick the best of what I see and the best of what they see and come up with some type of an idea. This was the 1987 market, and you'll notice there on the 25th of August, the high made was right there at the harmonic convergence. That was the 25th of August. We made a 61% retracement on October the 2nd of that year at the exact 61% retracement. And then, of course, we had the big move down. But let me show you where we were. And I covered this in the newsletter extensively. Okay, now here is the chart of what is happening back here in October of 1987. Okay, there was the October 3rd. Okay, now there was the exact aspect right here on the 5th. All right, that was Venus sextile Uranus. Now on October 5th, 1987, that occurred, and folks, it happened yesterday, April 20th, 2025. What that was telling me is that we were looking at a market that was getting ready to go down substantially. I don't know if it's going to go down crash-wise or not, but it just said that it had a really strong probability when these lined up that way. And the reason why it's important, folks, Venus takes 0.618 of a year. That's 222 days. I know it seems to unbelievable. It's 222 right out of Gartley's book, but 61% of a year is 222 days, and that's how long it takes Venus to circle the Earth. Okay, so that's known as the Fibonacci planet. Now, all we're saying now is if that happened, we were expecting the market to come down strongly into this next nest of lows, which should be around the May, let's try it again, Larry, April the 25th to 28th. I believe the actual date is the 25th, but I'd have to check it. Now, remember, when we do these things, and remember, one of the things that we always talk about is that, to watch for 382 retracements. Now, let's take a look at the NASDAQ last night, okay? Now, this is the NASDAQ when it was opening. I saved this because I thought it might happen. But anyway, there is the opening right here. You see the big gap down. We gapped down several hundred points. Then we had a huge break, okay? And then we rallied for just about an hour and a half, right up to the exact 382 retracement up here, around 183.70, and then we just totally melted down. And that's what we were watching. If you'd have done this with the Dow Jones Industrial Average, you'll see there was the high Sunday night right here. The market broke down. There's your same rally right here at the 382. Then it broke down. And look at the opening this morning, folks. The opening was exactly 382 off this last high that we had at 382. Just perfectly spot on. It was 61% of this, but there was a 382 of that higher level right there, which is very important because that was the 382 that started the whole process down when it broke. That told you that's why it was there. And of course, we were down about 1,100 points at one time. And just recently, just bring this up because I heard them on the news here, just recently while we were on the air, there was another 382 retracement right here off of this high on the open. There it is. There's your opening high. All right, there's your rally back. Exactly to the 382, and we're already 250 points below that. All right, now that 382 is very important. Now let's look at this. Look at the natural gas, the same thing. Natural gas last night, gap down big. What did it do? Rallied exactly to the 382, and now it's approaching the 382 retracement, and there we are at 13303. So these things really work, but some of them don't work. Let me just show you one that looks so perfect. I sent it out to everybody. I said, oh boy, this is the one we've been waiting for, okay? This is what I was watching. Here we were with the there's where we were from the range of yesterday. There was the $75 drop on Friday, perfect ABCD. There was the 1.618 expansion. Look at this pattern that was lined up here perfectly, folks. So I sent this out. Of course, we only risk $10 when we're doing these, but I put the channel line in so you could see it. But there it was, right there, to sell it at 34.18. It went from 34.18, it came down to 34.09, and I said, wow. I said, we finally got a winner. And when I got the R out of winner, it jumped through the stop. Well, you would have been filled at the stop, but it went all the way up to 41, I believe, was the high so far today, and it still might go higher. But they fail sometimes, and that's the whole reason of why we do these shows, is to show you can't be right all the time. The best you can is what we're looking at. So let's get back here and take a look at some of these things that we're watching now. On the long-term weekly, I was just informed that the high that we made here, let's just get it up here so we can see it. Here is the S. Let's get it right here. There's your picture of the Dow. We are at 1 standard deviation, folks, on a long-term weekly in the gold market. All right, now where the high was at 42 was the high, and there was a small head and shoulders pattern right here, but that's pretty hard to trade unless you're only focusing on gold, and now we're just bouncing around. But gold went a lot higher, no matter how you look at it. We didn't think that it could get any higher. See, 33.99 was the highest. That's 3,400 was the highest price I could get. Now there was your 1.618 extension here at 33.45. We hit that. We hit that Sunday night, okay, and it backed off. And then look what happened. You see, it just kept going higher and higher. So you can't stand in front of that. Now there might be a top in here somewhere, but you might have to try it 3 or 4 times before you get it. That's it, because frankly, the open interest says this is weakening, but boy, it certainly is weakening when you look at the price of it. That's for sure, but the whole world's long gold, or almost the whole world. Okay, now let's move on here. Let me show you where the problem, it's my opinion on the problem. You can see these markets are just melting down like crazy as we thought they might be, but look, here's the problem, folks. It's not the stock market, it's right here, okay? Now, just a little while ago, they were extremely ecstatic on Bloomberg because we had a 1-point rally in bonds. Look where it stopped, exactly at 382 off the high that we made back on the 16th. And look at it now. There's the problem, folks. It's in the bond market. The tariff thing is what we call baloney. That's like a magician's trick. Sometimes we do this, sometimes we do that. Look over here. Don't look at the pink elephant. Once you say don't look at the pink elephant, then by gosh, you don't look at it. Oh, I have a special request here. Dan from Wisconsin, I hope you're listening, or Jack LeBee from Wisconsin, please call me, 520-241-5793. 241-5793, area code 520. We'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, the reason why I asked the request of those one of those two gentlemen call me is because I got letters from them with very nice things that, they'd made some money and they were very happy, and they gave me a nice little incentive to help some folks here in Tucson, which really helped a great deal. And I just wanted to thank them personally. Folks, you're not going to believe this. I've been under a little bit of a health problem here with dehydration and exhaustion, but I cleared that up after 3 or 4 days. The doctor said I'm going to be fine. I was never in any danger, but I was a little bit overworked. But and I love this stuff too much. That therein lies the problem. My doctor laughs at me. He said, "God, you don't know how lucky you are to do something that you love so much that you get sick over it." And I said, "I'm not sick." Yeah, he said, "But you're overworked." Anyway, this is the euro, folks. Last night we hit that exact number, 11537. It was just a tiny bit higher than that. As you can see, we're more than a point or so lower than that. We'll just draw this up so you can see that we've had a pretty big break from that level. There's where we were, and you can see we've been coming down ever since. And as you've just looked at the same thing that we watch all the time, we always want to watch for our nice little 382 retracements. This one's a little more. You can see that goes to about the 50% level right here. Actually, it hits a 61% retracement. Then you have a 382 right here. We'll just go through these. Remember, this is the euro, the most actively traded thing in the world. So then you have the next high, and that one takes you just shy of the 382. But by golly, look at that next one right there, almost to the exact tick. 382 off of the high. That means we've made some type of a high here in the euro today, which means that the U.S. dollar may not be nearly as bad as some people think it is. Now, let's just take a quick look at it. So, and believe me, folks, it's been under a great deal of pressure here. And I'll get this up here, God willing, and we'll see if we can get up and take a quick look at it. We've got to get it on the weekly because that's the only way you're going to see it down this far. Hold on 1 second here. Get the time, hit the old W here, and that's what we're working right now. As you can see, we're breaking down really good, okay? Now, we've broken down below the support here at the 61% retracement. The euro, okay, went up to the exact number. Now remember, the dollar index has got a whole bunch of currencies in it. The euro is 53% of it. So this is the importance that we're right there. Now you can see we're quite a bit under the 61% retracement, but we're in that zone. And with the euro looking the way that it is, the dollar could get a little bit of a rally here. How much? Look, the last time it rallied 2 weeks, and we've been up 2 weeks, folks, in the last 2.5 months. So it's not been much of a bounce, and that's one of the reasons probably why we've got a gold market that's up into the stratosphere. Okay, we'll get rid of the dollar index here, and I want to talk just a little bit, about the tariffs. I don't think the tariffs are where the problem is, folks. The problem is in the stocks themselves. Let's bear with me here now. I don't trade stocks, and I'm just an old country boy just trying to figure out what's going on in the world, but just with common sense. Okay, let's look at some things that are really important. Okay, let's take a look at the stock like Home Depot. Everybody uses, well, not everybody, but a lot of people use Home Depot. So let's take a look at this. Now, this is not a bullish stock, folks. Look at this. Home Depot's been going down since November, and look how far down it is. You see that? That's not a good thing. The same thing if we look at Federal Express, okay? If you come up and look at Federal Express, look at this, how bad it looks. These are people that deliver the packages. Federal Express. Now, you want to see a really bad one is you look at UPS. And UPS is telling you that there's something not right. We already know, we found out Friday, of course, that there's certainly something wrong with United Healthcare right out of Eden Prairie. As you can see here, we are. Well, actually, it's unchanged today, but look at this. Look how much UPS is down, folks. This used to be a $200 stock. Now it's a $95 stock. It's in half and going lower. Not very good. Now let's look at this is why the Dow was down 500 points on Friday. Is if you look at this used to be the most expensive stock in the Dow, okay? Well, they took $100 and some out of it on Friday, and it's still going down. In fact, it's almost at an ABCD. Let's just draw that in here. Of course, with this gap, you can't really count that, can you? Hold on, let's just draw that in. There's your AB, the old simple ABCD leg, and there's where you are right there. Down another $15, $17, but this is a big question mark in here, just like this one was. So I wouldn't touch that with a 10-foot pole. To me, looking at these cycles, it looks like around the end of this month, early next month, we're going to get one heck of a rally that's going to last several months. It's going to get everybody bullish again. And that's where the real party will begin after that happens. But we'll do one thing at a time. Let's look at a couple other stocks here, and then I have some other questions that people have asked me about. Okay, let's look at Walmart, all right? Let's see how Walmart's doing. Well, Walmart's doing better than most, and it's still, well, that's not Walmart. There's Walmart right here. So there's Walmart. It's had a pretty good rally in here. It's only down a little bit today, so that's held up pretty good. Walmart's held up, and Costco has held up pretty good. But boy, if you look at some of the others, boy, they've really gotten hit pretty. Even the pharmaceutical companies have been hit quite badly. So let me get rid of these out of the way here. And so it's not just, the problem is in the bond market, folks. That's where the real problem is. The bond market is many, many times bigger than the stock market. You got to remember that. Many, many times. You can see stocks making new lows here on the day, also in the Dow Jones and everything. This is what we were trying to expect today. But there's going to be a great buying opportunity coming in here pretty soon. So that's where we're at. There was the 382 on the opening this morning off of that high that we made back right here. So that was, look at that, from there to there, folks. That's over 900 points. That's a big move down. And we had the same thing happen in the NASDAQ. That was the same thing that we had going in the NASDAQ. There's well, you don't see it clearly here because this was Sunday night, was right there, and the 382 was off of this one. That was a 4-hour chart. If you went down to the smaller time frame, you'd be able to see that there was your 382 here on the opening this morning. There it was Sunday night. Real easy one, okay? I'll just draw that in so you can see it real easy. From your high right here down to your low, there it was exactly. There's Sunday night's opening break. We came down, we rallied A, B, C, D right there Sunday night, right there, bada bing, bada boom. There was Sunday night early, then bing, bang, boom, and boy, down we've come. And that's it. We had a little tiny ABCD here right off the opening, but we are headed lower. And like I say, the date on that will probably be down a little bit low. Now, this could change overnight if something comes up with the tariffs and stuff, but tariffs is not the problem, folks. If it were not a problem, it would be shown in the bond market. The bond market should be rallying on a flight to quality, and it's not doing that. That's a very bad sign. You've got bad action. A good reason for bonds to go up in bad action. That's not very conducive to these prices. Let me get this straight up here a little bit. Tile vertical, make sure. Oh, I'm missing. I knocked a couple of out. What did I knock out? I knocked out. I'll figure it out later. Oh, the bonds, the most important one. I'll get back to that in a little bit. We'll be right back, folks. 877-927-6648.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, I wanted to go over the gold market. People have asked me if I've seen this before. Yes, folks, I have. I have been trading gold actively since they allowed us to trade it, which was back in 1976. I started with Drexel. And for the next 6 years, gold and silver was my main thing because I had the coin dealers in Southern California as my customers. I did hedging for them. Plus, I had about 20 and I, between the two of us, we had like 68 customers that we traded we didn't have hedge funds or mutual funds, commodity funds back in those days, so we traded them as a group, and we did quite well. But anyway, we did things other than gold and silver, but gold and silver is what we really traded. In 1980, gold topped on the 20th of April of that year at 865. The low had been around 127 back in 72, 73. That level of $35 an ounce was a joke. No one ever believed in that. But from that level, it went from 127 up to 865, and then it started a 21-year bear market that ended on in 2001, and Tom O'Brien was the king of that. He nailed that thing right to the exact day. I'll never forget that because I had met him around that time. I didn't start the show here until 2007, but that's where it topped. And after that 21-year bear market, it went from 238, and right now it's trading at 34.28. So it's up about 15 times the normal, which is quite a bit. Now you'll notice that back in 2011, well, actually there was a high here in 2007, and then it broke in half, and then went up into 2011, and that was in, I believe, February of that year. We were in Hong Kong, and gold was trading at, the high was at, I think the high was, it says 1922, but I believe the high was, well, I know it was 1934, because I said at the money show at that, it was the gold show, it wasn't the money show, with Louis Rukeyser, what was that guy's name from Switzerland? Oh, shucks. I'll think of it in a minute. Anyway, I was the only one that was bearish. Everybody was looking at $2,000-$3,000 gold. Well, already at $2,000. They were looking at $3,000 or $4,000 gold. And I said I thought it was going to drop in half. And of course it did here in December of 2015, when I became very bullish at $1,030. We also had a big high here in 2021. The market broke from 2021. It broke down $700 to right around $1,600. And then we've been on a meteoric rise here since that time, and we're up around 3,400. How much higher it's going to go, I don't know, but I know how it's going to end. Now, what I did is I wanted to show you the relationships. In other words, in 2011, the market went from this low, it rallied 1, 2, 3 times up to this level. Now, where we are right now is we've rallied 1, 2, 3 times, only takes you up here to this level here. So it's gone even much higher than this. This is the biggest leg ever. And as you can see here, in the last couple of months, the last 2 months, we've gone from 2,800, we've rallied $650. Huh, big deal. You've rallied $600 in the last couple of weeks. So that's why I think this is how markets end, but you can't say where it's going to go up. This was where 20 weeks ended, now we're 22 weeks up, and it's still going higher. So, you can try picking a high and low, but, you got to stand outside of it if it doesn't work, for God's sake. There's too many other things. What if you'd have just been short the gold and not being able to evolve in this beautiful bear market that we've got going on here that we've been able to take advantage of? See, that's the real thing of what we're looking at. That these two gentlemen that sent me this nice, I have to explain that. Most of you that have known me for a long time, Sarah and I, we do our tithing not through a church, but we do it through a a group here that helps families, that 98% of the money that goes to the families, as opposed to, churches and stuff where you might not get that much. And what we do is we're on a list, and occasionally they'll call us and say, look, we have a family that really needs help. Are you able to help this month? Well, we usually are. And so we had a special request to do this and special request to do that. But many years ago, 12 years ago, if you remember, well, not quite that long, 10 years, we had a family here in Tucson that, think of the worst possible thing that could happen to you folks and multiply it by 10. That's how bad it was. Okay, well, one of the gentlemen that sent me the letter said, look, he said, I want to give you $500 if you'll tell me what that was that shook you up so bad that you won't even tell anybody what it was. I said, you don't want to know? And he said, I want to know. He said, I'll give you $500 more. I'll give you $1,000 if you tell me. I said, I'll pay the other $500, but I'm not going to tell you. And I'm not going to tell him, because it's something that you cannot forget. God has blessed me with this because I'm able to help these folks, and Sarah does too. But that's you just don't want to go through what those people went through. I mean, it's just it's hell on wheels, I guess is the best way to say it. Anyway, that's what we're paying attention to on some of these things. I'm going to get to some commodities here that need our attention, because we've done pretty good in some of these other things, and soybeans and stuff and wheat, and we want to be following those. We have to start doing that also. I've tried to cover them in the newsletter, but I focused this week's newsletter on these timing indicators that were so clear to me that we were going to come down hard today and probably this week and maybe early next week. It's going to get pretty nasty to the downside, is my because they got to wipe this stuff out. These people that are in these markets that have been here for a long time, they don't realize where the real problem lies. And I took that doggone chart out of here that showed you where they were as far as the amount of margin that they have, and they haven't really cleared that out yet. And they've got to be able to do that to get it moving anyway. So there will be a high up here in gold, maybe not in my lifetime, but it will be coming, and then we'll find out what's going on. Let's get back to the commodities here. Well, let's check the old clock on the wall. It's been a week since I've been on this show, so I had to figure out what the rules are. We got a minute and 25 seconds. That's a lifetime. All right, let's get up here and take a look at crude oil, because crude oil was one we really wanted to be short today. We didn't get up to our level. If you realize that we were trying to make this, I did focus with this one on the in the newsletter, but we really thought we had a chance for this really nice ABCD pattern to come up here at around 67.12, and we didn't quite get there. We only got up to this level right here. All we really did is we completed this smaller one last night, and I focused on that just a little bit in the video, but I thought we might get a little bit higher on from where we were. You see that big move here, and then of course it gapped down. No 382s here at all, folks. It's just been bang all the way down, and it's still going lower. So watch for a little 382 in here. Looks like you're getting one because it's holding up right here. Let's go to a smaller time frame, and when we get back, we'll talk about, no need to talk. This is still headed lower. We're going to talk about wheat and beans and corn next when you come up. So stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I want to go through the gold market here, why it's so hard to be short. Let me show you this. This is where that beautiful pattern was that we saw, backed off right here, of course, and then it took off. Look at it went from the low. This is the early morning low on Monday morning. You can see there midnight. And then it has a pretty big run here. Look at the pullback. It comes almost exactly to the 382, makes a little bit higher high. That means this is, and it can't even make an A, B, C, D to the downside. Look at that. It misses that by about $3 or $4. This is telling you this market is really still quite strong. Now, right now, if you're trading it on a really short-term basis, and I do that quite a bit, we do have a 135 pattern setting up here right now. This is a perfect 135 pattern in gold. There's your 1, there's your 3, there's your 5. You have lower tops, correct? Bingo, bango, boongo. There they are right there. First thing you want to do is measure from your high down to your low. You'll see that one comes in exactly at the 78% level. You do the next one, and it should come in pretty much at the 78% level. There it is right there. There's your 135. So if you're short, you put your stop here above 34, say 36, and that is it. And that's a 135 pattern on the downside. But it doesn't, other than that, I mean, there's nothing on the long-term side. And it does a beautiful job with ABCDs on these numbers. Look at this, folks. There's your first ABCD right here. There's your ABCD. You go up there, you can see the big move, 127. Then you have another ABCD right behind it, ABCD right there, right on the money. And there's where we are now, and that's what we're looking at. Okay, that's all these are. These are just numbers, and that's what we're trying to do, is to enter, low risk. But I can't send this out to anyone because it's a 13-minute chart. By the time I send it out, this thing could be over and done with. And that's the way that it's done. So that's the way I'm watching things. I hope that helps. But from a longer term perspective, I really do believe when you look at this on a long term monthly that we're up here in the zone where the highs are going to come in. And folks, trust me, I didn't miss any of this. I'm not going to miss any of this either. So that much I can promise you. Because when this is over, this doesn't. Sure, it can go up a lot higher than anyone can think. And not only that, but the open interest is dropping, folks. 2 months ago, the open interest in the gold was 580,000 contracts. Now, 2 months later, with it $700 higher, there's only 480,000. 100,000 people left the market and left, $800 in gold on the table. But that says the market's weakening. But you tell me, look at that chart. You think that's weakening? Somebody at the Chicago Mercantile Exchange needs to send their badge back in. But that's what the theory says, that if the market goes up and open interest is dropping, the market is weakening. That's the bottom thing. I put that in the newsletter so people could take a look at it. Now, I've been asked to take a look at a few stocks here, which I think we should. We'll take a look at Tesla because it's in the news. It's actually holding up better than most, and we'll get this up here. See what I thought it was. Stand corrected, Larry. Again, I don't follow stocks too much. Well, there's Tesla on a 60-minute. You can see it's down quite a bit today, and it's still heading a little bit lower. Let's look at this on the daily, and you can see it's down near the lows. We're probably going to take we most certainly are. Well, there's no certainty about it, but most probably we'll take that low out. The other one that is under a lot of pressure was Apple. Apple was the one that was the key to what happened, folks, to these markets and why they started to fade, because you had very, very, very good news when they said that the iPhones and the computers were not going to be included in on the what do you call it, the tariffs. Okay, well, that was right there. There was the tariff day. Instead of closing really strong, it was still up on the day. It closed right on its kabuki and then bang down and down. Now you still see we're going lower. So that was the real bullish thing that happened. You had bullish news, bad action. That's always a bad sign, and we'll take a look at it. Apple's still going to be in business, folks. I do not believe it has anything to do with tariffs. Tariffs don't work. They never have worked. But anyway, people try to use them, but they've only tried them a few times. But because if you tax somebody else, they're going to re-tax you back. You don't have to be a third grader to figure that out. At least my 10 cents worth. And if you pay more than 10 cents, you've overpaid. Let's get over here. Take a look at a few others that are relatively important here. We need to look at. Hold on. The Hang Seng Index. This is the Asian market. Okay, now we've had some bad things happening. Hey, it's held up relatively well. Shut the front door. This is good. Is that for today? No. Sorry, folks. We've got to refresh. This has got, 4 days coming here. Wow, this is not updating. I don't know why. So this is as of the 17th, folks. Here we are, the 21st. So something's not right. It stopped at the 382. I'm pretty sure it's down, but I don't want to use that. Okay, let's take a look at J.P. Morgan. And we need to look at Goldman Sachs and J.P. Morgan. Here's J.P.'s coming up next here. J.P. Morgan is right here. That's one of the better stocks in the group, and it's holding up relatively well. You can see we had a nice rally here. It's a nice ABCD rally. If we look at it from the high that we made, go back to where we were at the high, you'll see that just like the stock market, it made a 50% retracement. There's where, I said this was very similar to what happened in 1929. They rallied 3 days in 29. This time we rallied 5 days, but that was influenced by this day here, which the day is when the president said, well, we're not going to do it right now. We're going to lower the gauntlet in 3 months. Well, 3 months is 4 lifetimes, so now they'll probably be on a different planet by that time. But that's what happened, and now you can see things are rolling over because there's other things that they're worried about. And what they're worried about is what they should be worried about, and that's the bond market. That's where the real problem lies, folks. That's real money, 6 to 10 times bigger than the stock market, and nobody likes it. So that's why you've got to pay really close attention to it. Now, the other one we wanted to watch here, hold on one second, I'm about ready to sneeze. We've got the Palo Verdes in bloom now, folks. We're in the springtime, and getting ready to sneeze. There it is. Sorry, folks. God bless me. All right, let's take a look at NVIDIA. It's down 5%, I heard. Yeah, and you can see this is where we are. This has been going down quite a bit. The high was 150 and change. Whoa, let's get it over here. If you remember, we had that big ABCD there that day. Remember A, B, C, D, and it measured right to there. If you did the ABCD like we do it, there's your AB equals CD. You see it didn't quite make it, but because of the gap and the wide-ranging bar, you have to increase this. The CD leg has to be at least 127, and if you put the 127 in, you'll see how close you come to where you want to be. And there it is. We'll be right back, folks. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, getting away from the tariffs a little bit. This is the Dow Jones Transportations. I'm going to do this in honor of Richard Russell, the Dow theory guy, and he said they have to go together. And as you notice, the transports has been leading the market down. You can see here back in March, we had a 382 retracement, A, B, C, D variety. And then from there, of course, we've been going down, and as you can see, we still had, well, trust me, it's 382, and now you can see we're still heading down, and we're going to have a rally here in the next, not now, but soon, and that's the one you want to be watching very closely. That rally should last anywhere from 2 to 3 months, and then after that, folks, it's going to be pretty nasty to the downside if we continue following what we're watching. And right now it's following along. So that's all I'm paying attention to as we go through here. Now let's take a quick look at that thing we were looking at in the gold, because that was really a very small time frame. There it is. You can see here we came down a little bit, and you can see we're almost ready to pop up above it right now. So this 135 pattern doesn't look like it has much to go on. All we've been able to do is back off $3 or $4. Above here, above 34, 34.34, and we're at 34.32 right now. This is no good. So you only have to risk $2 to see if you were right. But the most you would have made here was $4, so it's not really working very much. So that's why you got to be really careful. This is not a bearish chart, folks. This is a bearish pattern, but it's not a bearish chart. You got higher tops, higher bottoms. This thing wants to go higher. How much higher? God, I don't know. Hey, it went through 1.618 at 34.48, like at 33.48, like it didn't even exist. And now look at it. We're still going higher. So there's a sum of total of what we're watching here as we go through looking at some of these things. Okay, you can see the bond still going lower. There's the problem, folks. The problem is in the bond market. It's just like the old magician. See over here, see over there. Watch that pink elephant right behind you. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow. Paula Douglas, our guest tomorrow, folks. Stan Harley on Thursday.